Welcome back, and you're watching Market Fatafat on ET now. Let's bring on board Ashish Kayal to talk about the charts now. And Ashish, very good afternoon. And the first stock that you picked up for us today is from the banking space, Axis Bank. How is this one looking like on the charts? What are the targets that you're keeping an eye out on?
Hi, afternoon to you and all the viewers. If you're looking at Bank Nifty is outperforming, and in today's session we see a dead movement on the Nifty side, but banking stocks are still outperforming. And Axis Bank is forming a classic rounding bottom pattern, showing a strong positive sign. So there is a possibility we can see a move towards the level of 940 on this stock eventually over next few days. And on the downside, the support for Axis Bank is at 875, bounce back from its 20 days average. There is a good volume that is picking up as well. So as long as 875 is intact, I think we should be headed towards 940 levels on Axis Bank.
Okay, that is Axis Bank for y'all. But let's just look at the numbers for Dr. Lal that are flashing on the screen. As of now, we're seeing the stock is down 2.3%. Profits have seen a contraction coming in on a year-on-year basis. 56 crores versus 62 crores last year. While in terms of the revenues, they've almost remained flattish. Nothing exciting there. 491 crores versus 486 crores. And we've seen that, post the numbers, we saw a slight bit of a dip coming in there. So keeping an eye out on that one. But let's move on and talk about Bosch. That one too is in focus on the back of its numbers that came in last evening. Revenues saw a growth of around 22%, 23% approximately, while in terms of the operating performance, also seems like a decent operating performance coming in there because EBITDA saw a growth of 18.7%. Margins, slight bit of a contraction in terms of the margins over there. EBITDA margins at 12.86% versus 13.29%. Bottom line of the company has seen a growth of around 13.68% as well. Let's move on, and okay, we have more numbers, and yes, this is surely an indication that Asian Paints is come out with its numbers. Looking at the numbers, Arman, interestingly that we're seeing a bit of a uptick in terms of the profits of the company at least versus our poll.
Yeah, 1,230 crore rupees is what Asian Paints has delivered. So yes, that is coming in as a bit of a beat. There's been double-digit volume and value growth in the decorative business for India in Q4 as well as for the full year. The company as well has gone out to say that there has been double-digit constant currency growth in their international business as well as the full year. Now we're awaiting the quarterly performance. The only headline number that we have with us is the PAT, and clearly the street is cheering that. Remember, we were working that with the fact that there would be a double-digit volume growth to the tune of 12% this time around, largely on account of the favorable base, the high number of wedding days and the normal weather conditions. All were expected to attribute to that volume digit number. Watch out for the revenue growth as well, as we're working with a number of about 88.54 on the revenue front. That was likely to be higher by 2.5% sequentially. And whether or not the cooling off of the raw material prices has worked into their margins, that as well is going to be eyed closely by the street. Remember, we were working with a number of about 19.7% in terms of their margins. So still waiting out for other earnings. The revenues, I think, have come in line with street expectations, but what the number is, I'm not very clear. The global business, the management has said, has been strong in Middle East and Africa, slower though in Asia, and they will aggressively pursue growth down the line.
Okay, surely, but let's bring on board Priyam, who's joining with us to talk about Asian Paints numbers as well. And Priyam, seems like the street is at least happy with the numbers because the stock has moved from the red to the green. Above estimates at least is what the profits and the headline numbers are looking like. What does it take that you are picking up, and what is your first take on this?
The numbers are very strong. So the revenue is in line with our estimate, but the beat is on the profitability front. So definitely the numbers are good as expected by the street. Also, consign like numbers are also strong. So based on that, the Asian Paints numbers are also good because there will be a volume growth on account of favorable base on the decorative side of the business. We'll have to see from press release. So on prima facie, the numbers look good.
Okay, we do have numbers now. 87 crore rupees is what the company has delivered by way of its profits, which is up 11% on year and up about 2% QOQ. The company's EBITDA has come in at 1,865 crore rupees, and EBITDA margins, yes indeed, I think that too is going to please the street at 21.2%. There has certainly been a margin expansion. Just wanted to get in your thoughts then as to what the outlook is on the margin number, given that it has Priyam been a healthy number.
Yeah, so based on the margins, definitely the fall in the raw material prices has benefited the company, in fact, in the entire paint industry. So going forward, we also maintain that the gross margins are likely to inch up going ahead. Also, we look demand. Also, we expect the demand is likely to continue, but however, we have to see what management tell in the con call going ahead. So overall, we expect the margin expansion to come up in the upcoming quarters.
Priyam, just to take on, obviously that competition that has been increasing in the paint segment. Obviously, Asian Paints is among the market share leader coming in there as well. So would that be any point of worry coming in there? The company has taken some bit of a calibrated price hikes. So what should we be expecting going forward then?
So what our take on this that but definitely the competition is coming up. The Grasim is likely to come in the next year. Also, the Pidilite has announced into a paint industry. So the competition is building up in the sector. However, we'll also see to it how this company, so majorly with the top three players have announced the capex plans, doubling the capex plans. So on a longer term basis, we are positive on Asian Paints because they are doubling up the capacity in the next 2 or 3 years. Coupled with they are looking, backward integrating the key raw material, which is VAM, vinyl acetate monomer, the key raw material for the paints. Also, they have entered into white cement. So we are pretty much stronger on the longer term basis, given the Asian Paints announcement of certain initiatives. Also, their adjacencies like kitchens and bathwares are on the expansion spree. So we are positive on a longer term basis. Definitely, there is in the short term there will be volatility in the earnings as well as the stock price. But at a longer term basis, if investor wants to look at the stock, they can definitely look at the stock.
All right. Thanks very much, Priyam, for joining in and giving us that take on Asian Paints numbers. The stock is completely flattened out from the top of the day at 3,043. I think it's been a good set of numbers in line in terms of revenues, and margins as well have come in healthy. All right, let's move on to the next newsmaker then, and that's SRF. It came out with its numbers, a 7% fall in their profit, and that's largely been hit on the back of significant pressure coming in on the margins of the packaging film business. PAT at about 562 crore rupees. You've also got the companies, you've got brokerages as well, rather, reacting to its quarterly performance. In fact, you've got Jefferies, that's got a hold rating on an SRF, and they're saying that they've cut the target price from 24.50 to 23.80. They expect margins to mean revert from those life highs, largely on the back of rising supplies. Packaging film margins have collapsed, and FY24, according to Jefferies, could be tough. The elevated base in chemicals as well could drag growth, and therefore the stock is reacting.
Okay, let's move on and talk about FMCG major HUL on the charts. Ashish, this one has not seen that much of a run-up like the other companies have. Is it time that now HUL also will start participating in this run-up?
Yes, we can see that happening. We can see the other FMCG companies, including ITC, has strongly outperformed. And HUL has been consolidating for many months now. But it is looking, even today, the stock is now up by around 2.7%, 2.8%. And that is looking strongly positive over here. So long positions can be created in HUL. It is about to give a strong breakout. That's what it's looking on the chart. For the target of 2650 over near term. And on the downside, the support for the stock is at 2500.
All right, there you have it. That's the view coming in on HUL. Moving right on, Vamakshi, let's discuss RVNL and Siemens.
These counters are abuzz on the back of an order win that came in. Well, they have received an LOA, that is a letter of acceptance from the MMRDA, and this is for the Mumbai Metro Line project. Now, RVNL had participated in consortium with Siemens India, and Siemens is actually the lead partner with a nearly 60% share, while RVNL has a 40% share. Now, the cost of this project is almost 300 crores, and as a result of this order win that has come in for both Siemens as well as RVNL, both these stocks are gaining in trade today. RVNL, as you can see, is up almost 3%, while Siemens is also up 2%, and definitely, like Avan pointed out earlier, we did see the company abuzz just ahead of its earnings.
Okay, let's keep an eye out on both these stocks. Earnings surely coming in for Siemens as well, plus this order that is there. Let's move on, and Ashesha, at stock number 26, you have Zydus Life. Why is this one in focus?
US FDA action has come in with respect to this company. The company yesterday informed the exchanges that they've received EIR or Establishment Inspection Report for their Ahmedabad facility. They also said that they've received 0 observations from US FDA with respect to this facility, which is located in Ahmedabad. Inspection was conducted at company's manufacturing facility between the 23rd and 27th of January. So on the back of this news that has come in, the stock is in focus today. Now, of course, it is declining in trade trading with a cut of nearly 2%.
Okay, and let's also listen into Venugopal Ghare, Managing Director at Bernstein, in terms of what is his view coming in on the pharma space. Is he overweight on the pharma space? What does he like here? Let's go across and listen in.
On healthcare, we are it's a smaller sector, so we typically take it bottom up, and that's why I never call it as an overweight or underweight. But yeah, we're marginally overweight that as well at this juncture, but we're taking stock by stock falls. That's the way I would look at it, and that's underperformed quite a bit, in the last 2 years as well, especially last year. So there could be opportunities, but remember, it has to be bottom up. I think it's very hard to take a top-down synchronous call in healthcare at this juncture, especially I'm talking about the pharma names. See, domestic facing, of course, there's always this positivity, and I guess that's an area where we still need to be positive on. The other two areas you mentioned, hospitals and diagnostics, look, those are more secular growth stories. So I guess there's nothing to it this year, even though we don't really have coverage on those names. So, no specific, allocations that we've done to that.
All right, let's get a move on then and discuss the next stock. And Ashish, why is HAL on your radar?
See, HAL has been strongly outperforming, already touching that 52-week high, and it has been doing that with a good volume. That's a positive sign. And even now, if you see, there was some kind of a minor dip we saw a few days back, and from there, it's again about to give a breakout. So the stock looks poised to move towards the level of around 3,200 over near term, and the overall structure looks positive. There is a resistance at 3,200 of a channel, but that can be the target. And the support for the stock is the gap area near 2,940.
Let's move on and talk about Infosys then. Why is this one again in focus? Because we have a note that came in from JP Morgan. They're maintaining an underweight rating and actually have cut the target price for Infosys to 1,150 rupees from previously 1,200 rupees. So a slight just a cut bit coming in on the target price over there. But they also highlight that Q1 FY24 could be worse than feared, and expect Infosys to trim guidance downwards post Q1 print going forward. They see high risk to consensus earnings as guidance is downgraded. FY24 guide depends on the unseasonal second half recovery as well. Margin risk is what they're highlighting as well. Could be possible in FY24, growth risk in FY25, and they bake in a 4% CC growth and a 20.8% EBIT margin for FY24, while consensus is at 5.5% growth and 21.7% margin. So on the back of this, actually, this is a rationale, and they have trimmed a bit of their target price. JP Morgan's view on Infosys, or not doing anything much in trade today.
Let's move right on then to a clear buzzer in today's trade, Ashish. That's TCI. After the solid 6% run up, how much further do you see the stock headed?
TCI or Transport Corporation has given a very strong breakout in today's session after a long time. This stock was underperforming. So it is TCI, which is Transport Corporation of India, currently trading at around 672 levels. And we can see a huge breakout has come with a huge volume. So any dip from here to 660 levels can be used as a buying opportunity, and then we can start expecting a target of 760 on the upside, which can be the target as per the third wave, and the stop loss for the stock can be capped at 620 levels.
All right, watch out for TCI. That stock up a solid 6% rather in today's trade. Nazara Tech, then let's discuss that. Came out with its quarterly performance. The street cheered that, and now Jefferies has come out with their latest note on the stock. They maintain a buy rating, though they slashed the target price by 100 rupees to 700 from an earlier 800 rupees. They believe that there's a worsening margin outlook, but that offers value. They're also cutting the FY24 and 25 revenue estimates by 2 to 3% and have trimmed the margin estimates by 50 to 80 basis points. They say that the key disappointment is lower growth and higher churn in Kidopia, lower margin in Nodwin, and slower growth in AdTech. 566, the stock though is just about flat at that level.
Let's move on and talk about Birla Corp on the charts then, Ashish. This one surely has seen a good up move in the last 1 month as well. What should we be keeping an eye out on for Birla Corp in terms of the target?
Yes, Birla Corp has given a very strong run-up on the upside. And over past 2 days, if you look at including today, the volumes are more than even 2 or 3 times that we have seen in the previous 20 days average. So that's a huge volume that is picking up there. So something is buzzing around in the stock, that is for sure. And right now we can expect it to move towards the level of 1080. But the risk reward will be favorable once we get some kind of a dip from here on the downside. So buy the stock at around 1000 if you can get there. Maintain a stop loss of 960 and then expect a target of around 1080.
All right, those are important levels to track on Birla Corp. Moving right on then, Vamakshi, Mankind Pharma, just a day after we were popping the bubbly, now it's bad news.
Well, absolutely. This newly listed player, we did see a stellar debut come in as the company listed on both the exchanges, but now it has actually during the day plunged to as much as 1,306 levels, down almost 5.5%. But nevertheless, we did see that the stock did pick up from that level thereon and is now trading with a cut of almost around 1%. Now, sources are telling us that the Income Tax Department is conducting searches at its office in New Delhi. These searches are being conducted at the company's premises in Delhi as well as in nearby locations, and the documents are being checked. People are being questioned as a part of the action that was launched early this morning. Now, we did see that the stock listed with a premium of 20.3% on listing day, but today on the back of this news flow that has come in, the stock declined by almost 5.5%, recovered from that point and down nearly 1.5% as we speak.
Okay, let's move on and Ashesha, Bikaji, why is this one in focus today?
It is in focus because lock-in for pre-IPO investors has ended today. About 66% of the total paid-up share capital which is locked in is now open for sale. Of course, the stock is holding up with gains of nearly 4.5% as we speak, and the stock is up nearly 23% from its IPO price. Today, of course, the stock is in focus because pre-IPO investors can now finally sell their shares in the open market.
Okay, there you have it. That's a view coming in on Bikaji Foods, up a solid 4%. Ashish, what's looking appealing for Just Dial on the charts?
See, Just Dial has been consolidating near the higher end of the range, and the anticipation is that it is going to give a breakout on the upside. And the stock, I think if you look at the mid-cap space, mid-cap IT space, those stocks have been, many of those stocks have been buzzing around. So Just Dial can also follow. And above 700, I think it is headed towards the level of 740 as well. So long positions can be created here. 740 is the target for Just Dial, and the stop loss can be maintained at 664 level.
Okay, let's move on and talk about Relaxo Footwear on the back of its numbers. What we're seeing is, yes, the profits of the company have remained flat on a year-on-year basis. The revenues of the company overall stood at 770 crores, which is a growth of around 9.6% on a year-on-year basis, and grew over 42% compared to the pre-COVID levels. Now, they believe the volume growth was a double-digit growth is what Phillip Capital is highlighting. Other than that, in terms of the operating performance also of the company, operating profits stood at 120 crores, which is a growth of 6.2% on a year-on-year basis. Now, other than that, what is the company Phillip Capital is actually highlighting is that, the net cash position also. That is something that we should be watching out for as well. And management commentary, Q4 FY23, they said was mainly supported by substantial business growth across all segments as compared to the previous quarter, and price correction efforts have resulted in a good momentum for the company in all their major segments and not relying on any much in terms of the discounts there. So yes, a decent set of numbers has come in from the company and Relaxo Footwear passing in trade.
All right, let's move right on then, and Ashish, discuss the next bet in your list. It's Rosari Biotech. What do the charts look like?
See, we can clearly witness some kind of attraction happening on the pharma space. I think the next sector to buzz is going to be the pharma space, and Rosari Biotech is again, after a strong rise that we saw, I think in the month of April, there is now consolidation, and it can again resume the up move, possibly a third wave, which is going to be strongest and fastest. Expecting it to go towards the level of 840 on the upside. The targets are good, and the stop loss can be maintained for this stock at 670. So the risk reward is very promising.
All right, let's move on and discuss the next stock, and P&G Hygiene in the spotlight. Revenue from operations have come in at 883 crores. That's down about 9%. You've got the PAT, which has shot up 60% to come in at 103 crore rupees, with margins absolutely flat at 16.9%. That's the stock flat in trade. But it's Neuland Labs that merits a mention. A solid 20% move is what you're seeing. No doubt it has been a healthy set of numbers, but I don't know if it merits that kind of a reaction. Revenues have shot up, nearly doubled, or not really. It's come in at about 407 crore rupees versus 256 crores. And yes, the PAT has come in at a healthy 85 crore rupees versus 22 crores on a year-on-year basis. So clearly a big thumbs up being given. Watch out for the operational performance. Whether or not there are any one-offs is a bit unclear. But for now, though, a clear smart reaction on Neuland Labs.
Absolutely. Keeping an eye out on Neuland Labs. That was stock number 38. But let's move on. Ashish, Adani Ports, what is the chart indicating for this one now?
Adani Port has been slowly and steadily rising after it touched the level of 600. We can clearly see it has been moving and inching on the upside. Today we can see a stronger rise compared to the previous candles. It is much bigger than the previous candles. So it looks like momentum is gaining from here and the long positions can be created. But maintain a strict stop loss, which is going to be around 680 for this stock, and expecting a target of 750.
Watch out for all of those. Watch out for that stock in today's trade. Let's move right on then, and you had the AMFI data as well that came out earlier today. Sunil Subramaniam as well joins in, and Sunil, give us a sense as to how you're looking at some of the individual categories and what it's indicative of for the month gone by.
No, I think that large caps are clearly going out of favor with distributors and advisors who are advising the customers, because I think increasingly the news around the world recession and everything means that they're anticipating that external-oriented sectors will be under pressure. And the fact that IT and pharma are significant parts of the large cap indices means more of the focus is going towards trust the domestic economy. So I think a shift is happening towards the mid caps and the small caps away from large caps as a general trend. And I see that as a continuing trend over the next few months.
Absolutely. Mr. Subramaniam, this is Vinny joining in as well. And you know what I want to talk is the SIP number that has just come in. That has come in at 13,727 crores versus 14,276 crores last month. When you look at it, it's at a 2-month low. What is that indicating for us? What would you make of this number then?
It's a big figure of 14K, 200 crores that way, it shouldn't worry us, you know. I don't think it's a big difference. It's just the month accounting and all of that. And maybe typically in March, you know, there's a lot of people going and pushing them. So March spike was probably due to the year-end kind of a drive by banks and all to try and book it. So I wouldn't read too much into this drop from 14,000 odd to 13,800. I think it's by and large you have to look at it like it's a pretty healthy SIP book.
Okay. And Mr. Subramaniam, in terms of the AUMs, because that have been just climbing up and away, and I believe it's at 41.6 lakh crores for this month, and that is the highest that we've seen coming in almost since 2021. What is that indicating? Because asset under management has surely started seeing a healthy improvement there.
So two things are there. One is, I think in the last week of March, you know, after the finance bill got passed, there was this huge, in order to take advantage of the grandfathering which was provided on the indexation taxation, we saw a lot of money come in the last 4 days of March into the debt schemes. And so you get a full month impact of that in the month of April. That's number one. Number two is that in the last week of March, you also see liquid schemes see a huge outflow because many banks and institutional investors do not like to show mutual fund investments on their 31st March balance sheet. So they pull it out a few days before. Also, bankers are chasing for deposits to shore up their credit deposit ratios. So there's always a flight of capital from liquid schemes out from the mutual funds to the banks, which happens in the last few days of March. And in April, it all comes back because clearly they see the value in investing in mutual funds and liquid. So I think that's, again, the bounce back in April on the liquid schemes. That's why debt schemes have seen a sharp uptrend. That partly accounts for. This other aspect is that there's a market action because this month we have seen 20,000 crores of FII buying come into the market. So the market has been on a positive territory. So naturally, the equity component of the industry has seen a huge mark-to-market uptick. All these have contributed to that 41 odd lakh crore of the AUM of the industry growing this particular month.
Okay, thanks very much then for giving us more perspective on the quarterly performance as well as the overall AMFI data that has come out. Good to have you on board. On that note then, completely timed out on this leg of the show from everyone that put the show together. Thanks so much for watching.